Hello everyone, welcome to D Street School. Today we are going to discuss about the very interesting option concept called bear put spread. I just implement this option strategy in option stock called GRASIM India. Before we go and discuss in detail what is all about this option strategy, bear put spread. What is the thought process behind that? Why I particularly select this option strategy in this particular stock. So what is the idea behind that? Before we go on discuss in detail, just all I want to tell you, the reward is 3 times greater than the risk. So I would ask you to watch the entire video and leave your comment in the comment section. If you like this video, go on. If you like this video, go on, click the thumbs up button, and please do subscribe this channel. My name is Shiva Gurunathan. I am going to be with you for next 15 minutes. Let's begin the session. Before we go and start the session, I will give you the overview about the video. So what are the concepts we will be discussing here? First, we will start with the volatility analyze in a GRASIM stock. So when I say volatility analyze, that's actually a statistical concept. If you really want to know about what is volatility analyze, what is the thought process behind that, so how you can customize your stop loss by using this volatility analyzer. Already I made a separate video about this. I would request you to go and watch the particular video because I'm sure it will definitely enhance your trading skills, as well as when I give volatility range, so that you will be understanding better. And next, we'll be doing some technical analysis in GRASIM India, like candlestick chart and indicator. What is the view about the market? Is it going to be a bullish or bearish or flat market? We'll do technical analysis in GRASIM India. Then we move to option strategy. So what type of option strategy we use here? As I said before, bear put spread option strategy we are using here. So what is all about? So what is the basic concept about bear put strategy? We'll be learning that, and finally we will conclude the video. What is the position of the Greeks in this GRASIM India? So it's going to be 15 minutes. I'm sure definitely it will enhance your trading skills, as well as you can make some money in stock market by using my calls. So please stick with me. Next, we will see the statistical analysis. So GRASIM, as I said before, the current market price would be 1,496 rupees. So the average price movement of the stock is 29 rupees 77 paise. So this is I calculated for last 1 year data. So GRASIM India average price movement would be 29 rupees 77 paise. So this is the volatility levels I have given here. This is the historical volatility for the next 5 trading session. So as I said before, if you really want to know what is the historical volatility, what is the thought process behind that, how you can go and interpret the information in this template, already I made a separate video. Please go and do watch the video. So yeah, as I said before, this is the 5 days volatility levels for the GRASIM India. So let me make it very simple in this video. So R1, R2, S1, S2, this is not a typical support and resistance. Actually, this is a standard deviation 1 and standard deviation 2. So in order to understand better, so I made it as a R1, R2, S1 and S2. So how we can go and interpret this information? So I can tell you in next 5 trading session, 68% confidently I can tell you GRASIM India will trade between the range 1,462 to 1,589. So this is the trading range for the GRASIM India. I can confidently say 68% it will be traded between those ranges. So there will be a remaining 32% of chances GRASIM India might trade outside of the range above either upside or downside. If in case if you want to use standard deviation to go increase your confidence level, so you can confidently say in next 5 trading session 95% the GRASIM India will trade from 1,403 to 1656. So the remaining very few chances it might trade outside of the range, either upside or downside. So my personal recommendation would be initially you go and start with the standard deviation one, because the average price movement of the GRASIM India is 29 rupees 77 paise. So what is the range variation for standard deviation one is, it comes approximately 110 points. So, so I would request you go and initially stick with standard deviation one. So if you go and increase standard deviation, the variance will be high. So in order to make it simple, I gave it in the percentage. So next 5 days historical volatility would be 4.16 percentage. So which is come like a 66 points. You can go on minus 66 point from 1496 and add 66 point from 1496. So this is the actually daily returns of the GRASIM India. You can see the lot of line, zigzag lines. This is a mean line. As I said before, this is standard deviation one. So I made it as a graphical representation to understand, to have a better understanding. So this is R1 and S1, which means standard deviation one. This is R1 and S2. So when you see this graphical representation, it's very few chance the price will traded above standard deviation one level. So that reason I would recommended you to stick with standard deviation one. So these are the buyers and sellers strength in different levels. So this is the current market price of 1500. You can see buyers are higher than the sellers. So above 1500, buyers are predominantly higher than the sellers. So below 1500, sellers are predominantly higher than buyers. So as I said before, this is the overbought level. So what I am expecting, market will come down for few trading session. So let me go on let me go on investigate further how GRASIM India looks in candlestick chart. So what kind of information we can interpret so that we will come to the conclusion how GRASIM India will perform on upcoming trading session. So what you're seeing is a GRASIM India daily chart. You can find a very long rally which lasted for more than 1 year. And recently it cut at the trend line. It reached the trend line at the level of 15,034, and after that Friday it all the way tried to reach that particular level. Since we have a lot of selling pressure in the particular range, so the price closes almost near where it opened. So you can see this particular candlestick chart resembles like a gravestone doji, though it's though the close is above the open, but there will be a very minimum variance. You can see the very long upside wick which clearly shows there will be a lot of momentum on those level, and there is a lot of sellers always pushes the prices down. My conclusion would be, and since we have a more sellers and upside, so I can expect market will come down for a while. So the nearest support range would be 142 to 163. So I am expect market will come down to at least 140 range. And moreover, so we can go and see the 23D moving average and 50 days moving average and almost 4 days moving average. All the three moving average is above the price level. So except we can say the 4 days moving average is at price level, but what I hope soon it will pick the position above the price level. So let us see, once open the market, let us see how GRASIM India will perform. And we can also see the ADX level. As of now, the momentum is not as good like. So what I'm expecting on upcoming days, so there will be some gain in the momentum. So that will speed up the process to reach the price at the level of 1460. So my view is a short term bearish, moderate bearish view on GRASIM India. So let's go and see what is the strategy we will use, what is the thought process behind that. We will go and quickly review that. As I said before, this is a bear put spread strategy I am using here in the GRASIM area. The main reason is I have a moderate bearish view in the stock. Whenever you have a moderate bearish on any stock or index, you can opt for bear put spread option strategy. So I selected this option strategy. So what would happen? So what is the characteristics of this strategy? As we predicted it, if market comes down, we will be booking a fixed profit. If market goes against our prediction, so our loss will be limited, so it's going to be a fixed loss. So we will go and see how much that would be fixed profits and fixed loss. We will see in next slide. So this is a two leg option strategy. One is a long put. Theoretically, we will go and initiate it in the money. Another one is a short put. We'll go and initiate it in out of the money. This is a theoretical concept, but I made some changes by selecting the strike price because of my expiration of the contract. So I'm expecting target will be reached within the next 5 days. So I made some changes in strike price selection. Let us see. So what is all about? So GRASIM India. So current market price 1,496. Expiry date would be the August 26. As we said, our expected volatility for next 5 days would be 4.16%. This is a historical volatility. So this is a two-leg option strategy. One is a long put. So the strike price which I selected is 1,080. It is a OTM. I mean out of the money. So we have to pay the premium of 26 rupees. Our target day would be 5 days. So next leg would be short put. So I selected the strike price of 1,440, which is deep OTM, by receiving the premium of 16 rupees 75 paise. The target days would be 5 days. So net debit would be 9 rupees 25 paise. So once you go and initiate this option strategy, your net debit. So debit will be the amount will be move out of your account, which is 9 rupees 25 paise, and you can go and multiply with the option unit. So for this GRASIM India unit would be 775. The what is the break even point? So what is the point where we will be booking profit when the price comes below 1,470.75? We will start booking profit. So maximum loss would be 9 rupees 25 paise. So that would be the net debit once we initiate the strategy. That's going to be our maximum loss. So in rupees 4,393 rupees, this is our maximum loss. The maximum profit would be 30 rupees 75 paise, which is 14,606 rupees. So as I said initially, I hope you remember that. So reward is 3 times greater than the risk. So here the risk is 4,300 and reward is 14,600. So this is going to be a good trade if it works, it favors us. So let us see how it's perform in upcoming dates. So our target price would be 1,440. So all we are expecting is 60 points. And also we already discussed the average price movement would be almost 30 rupees in a day. That's average price movement. So all we are expecting around 2 to 3 days, it will be achieving our target. Okay, so these are the strike prices and our profit and loss in our option strategy. So what is the delta position? So before we go on see the delta position, you can also see the graph, bear put spread graph. As I said before, this is going to be a fixed profit when the prices reaches 440. That will be the maximum profit of 30 rupees 92 paise. This is the maximum. Even if price goes 1400, the maximum profit would be 30 rupees 92 paise in premium. What would be the maximum loss? 4,303. 4,393. That's a maximum loss of even if price goes 1,600 level. So the break even point is 1,470. This is a break even point level. So once price breaches this level, we will start booking profit. So this is the option Greeks for both the leg. So long put, the strike rate would be 1,480. The delta would be 0.49. So I hope you have a basic knowledge about the option Greeks. So if you don't have, I will give you a brief outline here. On next week, I will make separate video about this option Greeks. So delta is nothing but it captures the movement in the option premium by underlying stock. For example, if the premium is 30 rupees, right? So if underlying moves 100 points, so how much it will increase in premium? So all we need to separate this level. So 100 into delta 0.40. So which is 40 points. So it will increase 40 points in premium. Okay, do you understand what I said? Let me repeat it again. So if assume if our premium is 30 rupees, from this price level 1,600, for example, I'm telling, if price moves from 1,600 to 1,700, how much premium will increase? So it will increase 40 points, so that the new premium would be 70 when the price at 1,700. Okay, so what is the gamma? Gamma, it captures the rate of change of movement in delta by underlying. By the time when underlying comes to 1,700, the new option premium would be 70. Okay, so what would be the new delta level? When the stock in 1,600, so delta is 0.40. When stock 1,700, when stock comes to 1,700, what would be the new delta position? So that will be measured by gamma. Okay, we should not go and discuss in detail, so you will get confused. As I said before, I'll go and make separate video on next week about option Greeks. So what is theta? All I want to remember you, option is a derivative contract. It loses its values when it comes to expiry. So every day when it goes near expiry, every day it loses its value. So how much it will lose its value? That the answer will give by theta. So every day it loses minus 1 rupee 60 paise in its premium. So what is the Vega? Vega is a volatility level. So if volatility increase by 1%, how much it will increase in premium? So here 0.96. If volatility shot up 5%, so it will increase 0.96 into 5. So almost 4 rupees 80 paise increase in its premium. Okay, this is what all I want to let you know about that. So I'm sure the information I shared here will help you a lot. So here we discussed about the why I particularly selected this stock, what is the view about this stock in the stock market for upcoming session. It's going to be bullish or bearish. So once we found that what kind of option strategy we can go and implement it. So what is the basic concept of the strategy, and what would be our break even point, what would be our profit and loss, what the delta position, everything we discussed here. I'm sure you pretty much like my video. If does, please go and click the thumbs up button, as well as please do subscribe my channel. We'll go and see you on another video. Till then, bye now from Shiv Gurunathan. Thank you.